Good afternoon, and welcome to RiskScout's monthly webinar. RiskScout is committed to providing insightful, thought-provoking content to bankers interested in starting and growing new business lines at their financial institutions. We provide a mix of personal and professional development to give you the tools you need to be successful. My name is Marnie Keller. I'm with RiskScout, and I will serve as your moderator today. Joining me on the call is Kristen Parker, Director of Compliance here at RiskScout, and Michael Carpenter, Vice President of Risk Management at one of our partners, N Contracts. Their combined expertise in this area of emerging markets should make for a worthwhile webinar. This month's webinar is entitled Teamwork Makes the Dream Work, Building a Strong Relationship Between Risk Management and Compliance. Following today's webinar, all registrants will receive a link to the recording via email. Our presenters will leave some time towards the end of the hour for our registrants to pose questions. If you have a question you'd like to ask, you can put it in the chat box or not. I think that takes care of our housekeeping items, so I will turn it over to Kristen and Michael. Good afternoon.
Hi, everybody. As Marnie said, I'm Kristen Parker. I am the Director of Compliance at RiskScout. I've been in banking my whole professional career, and that comes with a big focus on BSA compliance for about the last decade. I kind of eat, sleep, and breathe BSA compliance, and I'm happy to be here with Michael, who can give you a little bit of his background since he's got such a strong suit in risk management.
Thanks, Kristen. This is Michael Carpenter. I'm within Contracts. And I also, like Kristen, started off in my banking career in the BSA AML space, and then moved away from that particular risk discipline into the larger ocean of risk management across various risk disciplines. I'm really glad to be here, Kristen. Let's get started.
All right. So just to go over the brief agenda that we're going to have today, we're going to be talking through quite a few different subjects here, all touching on it at a really high level. I think you're going to be really excited about this because Michael, when I was working through this as a BSA compliance nerd, I really geeked out on his risk management side of thoughts that he had in leadership in this space. So we're going to start with defining BSA compliance and risk management and really understand what responsibilities fall under their purview. We're going to explore BSA compliance and risk management and how they complement each other. We're going to discuss common breakdowns in compliance and risk management relationships. We're going to switch gears and go to talk about risk assessments a little bit and really do a deep dive into that in regards to communicating results and the impact of results. And then we're going to explore the benefits of utilizing technology and recap the importance of a strong relationship between risk management compliance, including BSA. Let's start with defining BSA compliance and risk management responsibilities. I'll take us through this one because, again, I geek out on this type of stuff. Really big picture wise, BSA is really a subset under general compliance. People often assume they are the same, but they are really distinct differences in their responsibilities. BSA is responsible for safeguarding the institution really against illicit activity. This includes ensuring the institution has sound due diligence efforts to ensure they really understand their customers. And by understanding their customers, they're able to manage the risk of that customer more appropriately. The regulatory results from a BSA regulatory exam roll up into the management rating of a safety and soundness exam. And then when we talk about compliance, compliance is responsible for ensuring the institution is following applicable regulatory requirements. The way I really like to think of it is the board of directors draws the line in the sand that is their tolerance for risk. And it's the job of compliance to ensure that they understand where that line is and advises when that line is being approached or crossed. They assist in measuring the risks of a financial institution through testing of different lines of businesses within the financial institution. and their regulatory results for compliance roll up into a different rating. They roll up into the CAMELS or ITC rating of the institution. So two different roles, but complementary and in their own right.
Thanks, Kristen. I'll actually take this slide. So risk management, and people call it different things. And when I say call it different things, I'm talking about, of course, risk management. Whether we're talking about a global take on risk management across your organization, or really say, well, we're not maybe large enough to think of risk globally, but you actually are. Risk management is commonly not associated with these various risk disciplines, but I think after today, we'll all understand that risk management is carried out in different words, programs, looks, and feels. For example, if we think of risk management as a big red umbrella, underneath that umbrella, we have these risk disciplines, like your internal audit. That's an aspect of risk management. And then any corresponding audit committee. Compliance, as Kristen so clearly articulated. And then, of course, the relationship with BSA under compliance is a risk discipline. Vendor management is a risk discipline. Right? These are all different subsets of risk or groupings of topics, right, under the broader risk management across your organization. Again, just understand that BSA is a component of risk management. So is vendor management. So is business continuity. All of these different aspects in your organization. So you may not have known that you're part of the bigger risk management picture, but you most certainly are if you're in BSA or vendor management or business continuity. Anything to add there, Kristen?
No, I think you hit the nail on the head right there. So let's talk a little bit about how BSA and compliance and risk management really complement each other. So both worlds really collide in their efforts to safeguard the financial institution against regulatory and reputational scrutiny. Both are responsible for evaluating and communicating known or perceived risks to key stakeholders. Both have a seat at the table for establishing risk management and escalation plans. And while responsibilities differ between BSA risk management and compliance, they overlap in their efforts to safeguard the institution. It's really a symbiotic relationship here where we're all working towards somewhat different goals in our own departments, but it's all for the greater good of the institution. Do you have anything to add to that, Michael?
No, I'll just really kind of just follow up with a statement that without compliance and specifically your BSA, then you don't have a sound risk management program, right? So yeah, everything that you said, definitely double down on all those things. They're all true, and you can't really have one without the other. Both are needed, the bigger red umbrella and then also BSA and AML.
So let's explore some common breakdowns in these relationships with each other between compliance and risk management. A lot of times testing results may be siloed. We may have some inconsistency in the risk assessment results. Michael, you were speaking to this really well when we were working through these slides together, about how you've seen in the past different takes on risk assessments and really the value that they don't bring or they do bring, based on someone's approach to it. And we all know, like, if we just want to be truthful, that none of us really like to do risk assessments. And I think what I'm guilty of historically, when I was a BSA officer, when it was time to do the risk assessment, I would just grunt really loud because it was just always felt like such a painful process. But then when I really started to dive into a different look at a risk assessment, how it should be approached, and really what the purpose of it was, and understanding that I need to be communicating my results in a way that it's something that my key stakeholders are actually going to care about. Because a lot of times we are guilty in this space of completing a risk assessment just to complete a risk assessment. And it's like checking a box. And sometimes the regulators look at it, sometimes they don't. And if they don't, if they do, they may not even really truly understand it themselves. So they may not even be giving you feedback on really potential gaps that you may have in there. Michael, you want to speak a little bit to that?
Yeah, we had some good conversations creating these slides. We definitely, I think both of us, it brought me back to the BSA-centric type of approach, and that inconsistency in risk assessment results. If we are inconsistent in the way that we are looking at risk, whether it's our identification of risk, how we measure our risk, how we measure our controls or mitigants to those risks across the organization, then what actually is being seen as the truth, right? And so here's an example of that, right? If I have my information security area that has a very well-defined and specific, maybe even clear to its audience way to communicate, this is how we identified our risk and this is how we measure our risk. Then in the BSA and AML area, you have a totally different way of identifying the risk and measuring the risk, they may differ, right? That the BSA may say, oh, this is a high risk area inherently, or even after all these things, right? We don't have enough people or process or systems in place to actually mitigate the risks, and so this is a major problem. But because of the methodology behind the risk assessment, it isn't actually, the voice of the assessment is not received. And maybe the information security assessment is actually much more much received in a better way. And they actually do get the attention that is maybe sought after that BSA department. So the inconsistencies almost is now the audience that they are speaking to, what's their understanding, or even who's the loudest person in the room, or maybe based on political capital. And we want to stay away from that. So definitely that common breakdown in a compliance and risk management relationship overall could be the inconsistency causing those breakdowns. And that's what we find a lot, right? I mean, even across various institutions, people are doing risk assessments in different ways. And not to say you can't do a risk assessment in your own way, just definitely want to make sure we talk about the elephant in the room. And that elephant definitely is under inconsistency. That's the guys that they come across. And if you don't mind, also, I think it's important for us to talk about a breakdown and getting specifically in how we actually measure risk, or measure issues, measure hurdles, measure potential problems. A lot of times it's so subjective, and risk assessments can be that way. But if you don't insert some objectivity, we're still under that highway of inconsistency, that you should be thinking about not just a narrow view of when measuring a risk. And I hate to just keep saying the word risk, because that can turn people off, just the word risk itself. But we'll call them issues for a moment. And if we're measuring issues and we're not backing up, like showing our work almost, right? If we're not actually saying that, no, this issue has this level of problem or level of like needed awareness, and I don't show my work, then my audience again is going to be like, yeah, I mean, like, I see that red color, I see you say it's high, but I don't think so, right? And so we've got like, a little bit of a watering down of the results of your assessment because your audience is not understanding how you got there. And so what I'm really trying to get at is, we know inconsistency, and then also a lack of support, and then also too, a lack of addressing various points of data. It's not just, it's, probability. And I'll close on this slide with this statement that what we commonly see, and I say we, many individuals that we speak with on an ongoing basis, and maybe Kristen, you too, is that when people are doing risk assessments, even in BSA and AML, they're focusing solely on like a volume perspective of that risk. This risk is present because we do 100 of this thing, or we do 10 times more than we did last year, and therefore, the risk is higher. And I'm not saying that that's wrong necessarily, but it shouldn't be your sole focus. Appendix J specifically of the FFIEC BSA exam manual is a risk profile more than it is a risk assessment. But inappropriately, most of the time that's adopted as the risk assessment. And so that's a pretty big breakdown. And again, the values of a risk assessment we'll get into in a little bit are not able to be witnessed or received. So a lot to take in there, right? But understand, if we recap this on this slide, and Kristen, sorry, I couldn't really take it over here, but it's inconsistency in the approach, the methodology, and then a short-sightedness in the various aspects of risk to be, addressing, and then also lack of showing your work or even adopting something that is misunderstood as the way to do a risk assessment. In this case, not to attack Appendix J, but that is not a risk assessment.
Yeah, and then just to add one more thing onto that is we talked about really overcomplicating a risk assessment is almost as dangerous as skipping on one, because you could assess everything under the sun that your institution may one day be doing or are doing just on an ad hoc occasional basis that really isn't affecting the overall day-to-day risk mitigation efforts of your institution. Overcomplicating it, you get people lost in it. The attention span of key stakeholders is pretty short, and I don't mean that to be ugly, but it's true that they want to know the top 3 things at the top, that you see as potential risk or maybe even potential opportunity. If you give them a document that is overly complicated, that you may be, missing the forest through the trees in that instance, right?
Yeah, I'll the last on that last slide is perfect. We're here, but when I was early in my career in conducting risk assessments, I think there might have been a little bit of a misunderstanding that volume was value, and it definitely is not. So you don't be afraid of doing, at least starting with a top 10 risk type methodology or mentality. You can always grow from there, but yeah, definitely right size. Thanks, Kristen. Those are great. And oh, look, yeah, definitely. Yeah, it's appropriate. Appendix J. If we're looking at this right here, it's the quantity of risk matrix and more of a risk profile that if you have this, then it is your risk. If you did this, then this is your risk. And that is a narrow view. And it's good to maybe prioritize your focus of where your risk is. But what are we looking at? It really is a probability. This is a really good way to understand risk from that probability lens, right? That, if you had this many wires, then, then you would have higher risk, right? I had more than last year, therefore I'm higher risk. That's the probability aspect of risk, right? The likelihood of occurrence of risk or the presence of risk based on volume alone. And that just tells part of the story. Here's an example I give a lot because somebody say, are you telling me that, that I wouldn't have more risk if I did 1,000 wires this year and I only did 10 last year? I mean, isn't that more risk? I'm like, well, yeah, based on volume, the probability might look like you have more risk, but there's more information to consider. So in this example, if I said my 1,000 wires that I do this year are with well-established clients with a source of income or a source of funds of those wires established, well-established, right? They come from their employment that's able to be verified. They're also domestic, right? And they're not in amounts that would cause us to be something that would be considered potentially unusual. The 10 wires, on the other hand, maybe they're international. They're for clients that are not well established and source of funds is not able to be identified. So now in 10 wires, I have much more risk than I ever would have in those 1,000 wires. So volume alone is not something to look at. But this is, again, quite common and a downfall in the way that, and it ends not always, doesn't always get the attention in risk assessments in a grander or broader scale. So again, there's some value here. And I think even specifically, the examination handbook talks about for any of your specific regulators, says in the absence of a risk assessment, that a risk-based approach could be established in utilizing Appendix J to see where they should focus of risk for the organization. So not to overstate or over-rotate on this, but we talked about inconsistency and careful selection of a methodology. Here's a prime example that this does serve a purpose, but would not be considered a risk assessment for your organization.
Yep, I like it. So here we talk about understanding really the risk levels and mitigation efforts in relation to other aspects of the organization.
This is, really about how if we have consistency, and now we're starting to get into the brighter side, right? We talked about not to be doom and gloom, but that we had to kind of recognize what causes problems today. But if we are a little more consistent and in understanding risks across our organization, then we can truly have a better understanding of, where are areas to prioritize and what are we doing about those areas that we prioritize because of a consistent way of looking at risk. So we have mitigation efforts, and mitigation efforts could be, what are the people that we have in place? Who are those people? Do we have enough people in place to address what we consider to be hurdles, issues, and risks? How about the processes? Do we have defined processes? Are we overly processed or have a lack of process, right? Sometimes even just a lack of awareness of a process can be a problem, but that could be a whole other webinar. But in doing consistency and having consistency, we can understand that maybe things that are not working well or working very well in the BSA AML area, and then ultimately a broader dimension of risk and compliance, we can leverage that information and apply it to other areas, right? If I have a problem with technology in BSA, right, maybe not that particular software is a problem or impacting another organization, but it might mean, and it might give us insight to technology problems in other areas, right? So having consistency and doing things with the eyes on the prize and the goal in mind, which we're going to get into in a little bit, does give us insight into other aspects of the organization. And then also, think about what a risk assessment is. Let's go back to just a visit still. Where are the problems? Well, if a risk assessment is done once a year, then are we really leveraging that risk assessment to make business decisions or to help us be better, even just operationally throughout the year? Probably not, because how do you understand where your priorities should be and if I'm effective in managing those priorities? Notice that I'm trying to omit the word risk as much as possible, because you can have a conversation that's about risk management in BSA without using those same terms that we commonly do and people get turned off by, right? So just understand that there should be an ongoing review of a double check throughout the year so that this information is actually more usable. Because when risk changes, you want to, again, have a realistic approach to understand when risk changes so that you can understand, do I have the appropriate people, process, and systems in place or technology in place to respond to this risk? And I think that kind of covers what I thought where our intention was in this slide. But Kristen, am I missing something here?
No, I think you hit the nail on the head.
Right.
Let's talk about the impacts of risk assessment. I found this really, really fascinating when you start to look at it at a much bigger level. when we were talking through this and we were really, when I took a step back, we talked about how traditional risk assessments, BSA specific, look at transactional and operational risk, but that's really not the whole picture. Just to reiterate, a lot of times, well, let's just, call a spade here. BSA officers and compliance officers are traditionally risk averse people, right? The less risk that they can have in their lives, the better. But they don't seem to think of it outside traditionally of the transactional and operational risk when they're completing a risk assessment. So really some other types that should be included in there is reputational risk and strategic risk, because those are what your results may be from your transactional and operational risk, assessment of that piece feeds into your reputational risk, and strategic risk. You should really be assessing that, and then review of your critical vendors. There's so many times that I've run into institutions who have done, they signed a contract and they just trusted that the people there were doing their job that they said they were doing. And, I'm a very trusting person as well, but this is really boils down to ensuring that your vendor is really doing what they say they're doing, because there's a lot of people that oversell and then under deliver. We really want to focus on having meaningful results in this. Again, meaningful, digestible results that account for the entire operation of the BSA compliance land, are specific to that than just siloed results that's, focus on specific things. Michael?
Yeah. This is, we definitely both geek out on this stuff, because this is an exciting aspect of this presentation. It's, when we talk about impact of a risk assessment, we're actually talking about more of the half full, the value aspect of it. And you did, exactly what you said, that risk assessments, unfortunately, for me, for many years, was seen as this is a compliance action. I'm doing a BSA risk assessment. But it really shouldn't be. It is really, this is the truest intersection between BSA or any aspect under compliance to the bigger risk management, like that global view, right? That global perspective, enterprise perspective, even, if you will. In that, we were making this common joke there, this humorous point that I like to make. Kristen, you and I was saying, I kind of cringe when people say, oh, we're in banking, we're in the business of taking risk. Well, actually, not so much. We're actually in the business of making profit, or so shareholder value or member value, right? Depending on the type of institution that you're talking about. You're actually in business not just to, get by or escape problems. You're actually there to win, right? And I know it depends on who you're winning for. Again, depending on your industry or depending on your institution, that might be a little different. But the point is, you're doing things for value. So let's just focus on BSA and AML. We are moving into or offering a product that is intended to bring value, right? Whether it be my clientele, and my shareholders, right? The collective value. That's why we made a decision to do something. But we know in order to do that, right, we're going to have to manage some of the, and I'm really trying not to say risks, but some of the potential issues that come with it, right? These are issues. We're going to have issues. If we cannot have any issues, we can have risk avoidance. Let's not offer the product. Guess what? No issues. But if we want to offer that product, we want to have value, right? We want to have a profit, or to be able to offer products to a market that without this product, we would not be getting into that market, right? And so, but we're going to manage the issues and the hurdles that come with it, right? And so when you think about a risk assessment, you have to think about your audience, and your audience are commonly the officers of the institution, executive management, and then ultimately your board, right? And what do they understand? They understand strategic objectives and goals. They understand like the bigger picture of things. Kristen said, like it's the attention span is not because they're not smart, but they've got bigger trestle board type views in mind. So understand that your risk assessment should be a help to that bigger picture, right? So before, like you give them your risk assessment on an annual basis, of course, up to 18 months. Again, that's what the examination manual says. But what are you delivering? Is it something that they want to actually hear? Is it something that matters to them? So you can actually have some good impact on understanding that. And then just operationally, if you do an appropriate risk assessment that thinks about more than we talked about just volume of a risk, we know that's not appropriate, but we can actually understand what are we doing about the hurdles. Hurdles, right? And we call them risks commonly, right? Under that BSA AML topic. And what are we doing about it? We talked about people, process, and systems. Or do we have the right people? Do we have processes? And then systems, technology, vendors, all of these things intersect and collide, right? Collide in a good way. So vendor management, you're like, well, we have vendor management. What are you talking about? That they handle all the stuff with the vendors. No, the vendors that you work with to help your BSA efforts, right? Ultimately are helping your strategy and should be part of your risk assessment. Not does the vendor protect data, right? You can probably handle that under vendor management. But is the vendor giving you the service that you pay for that's propelling you to success? You should be dressing that in your risk assessment. So as you can tell, pretty exciting stuff actually that a BSA risk assessment can help in a larger and grander scale, right? But remember that a risk assessment can be supportive and more insightful in what you're trying to ultimately accomplish, right? And can include other aspects of your organization, just like vendor management, right? So, Kristen, just like I told you, you get excited about these kind of topics. Was there anything else we wanted to make sure that we noted before we moved on?
No, I think it's important to remember that we're not in the business to be totally risk averse, right? We're in the business of managing the risks that our institution has decided is in their risk appetite, right? And identify risks that may be outside of that, because again, we're managing risks to make the profit, right? Yeah. And then risk assessment results. This, we've touched on this throughout the last couple of slides. But the traditional way of computing results have been associated with identifying risk and gaps without identifying potential processes for improvements or opportunities for growth. And when you start to step back and really dive into the why behind you're doing any risk assessment, not just a BSA, you should say, okay, we have this, subset of things that we're working through. We know that we have some gaps here. We know we have some potential risks with this, but it should also be the time that you should be looking at potential process improvements and in that, gaining efficiencies and opportunities for growth. I tell you what, as a BSA officer, it is hard to have conversations with people outside of your purview of understanding of what you do without them looking at you as just a cost center. So the more you can be that hero that shows that we have some room for growth with these opportunities, the more they're going to perk up and listen, and you become that, I like to call it the revenue protector and not the cost center, right? You're helping to, generate ideas to help meet strategic goals. It's such a, when you start, it's really empowering when you start thinking of your risk assessment process and your reporting of those results. When you think that, when and you approach it in a way that is bigger than what the traditional process is for delivering results.
Yeah, for sure. You know, Kristen, as you were talking, it just came to me this way of asking a question, and ask yourself as you're listening to this recorded webinar that when's the last time you were able to utilize your risk assessment in coordination with or as support of your budget requests? Like, hardly ever. If we're not doing risk assessments to understand I'm going to overuse this. I'm doing it on purpose. People, process, and systems / technology, systems and technology. If our risk assessment isn't understanding what we're doing about issues and hurdles, right? That's the thing I kept on repeating to you. Then the risk assessment isn't thorough, and it wouldn't be useful in understanding where those gaps are. We talk about the operational efficiency. And if I'm a BSA AML department, and I know we kind of focus on that just because, it's a collaboration between RiskScout and contracts. So we're going to talk about BSA, but any department in your organization, if you're submitting, I need more people, I need more third parties, I have a need here that I want to consider when we're doing budgeting. You should be able to look at your risk assessment and say, and this is how you can see it's impacting our area and then ultimately our organization. So, have your results tell a story that's beneficial and more than just, unfortunately, as a check the block, I did it, and it's a year, it's less than a year or at a year since the last one.
I like it. So let's go through some best practices for engaging all three of these teams together. I will give you, the last institution I was at was about a $4 billion institution. And we did a lot of, what's considered higher risk activities. We banked MSBs, we banked ATMs, we banked a little bit of crypto, we banked, we were one of the oldest hemp programs after the Farm Bill passed in the US. So we had this, we knew that we needed to manage our risks differently than our neighboring bank who just didn't take that under their belt as something that they wanted to do, right? So I was lucky enough to have, a really strong relationship with our internal audit team, our director of compliance, and then our BSA team, that we collaborated quite a bit on our strategy for communicating, our goals, our objectives, our testing results, and really this is best practices from my real life instance in my last institution, where we would set an agenda to address all of these things because we knew we were overlapping in some things. I mean, we wanted to have a consistent message when we were delivering to our executive management, our board of directors, so that they understood that we had a grip on what the risks truly were for our institution and how we could help mitigate them and also assist in achieving strategic goals, if that makes sense.
Looking at the best practice, it reminds me of, and I try to think of a devil's advocate. Like Kristen and Carpenter told me that I needed to be doing my risk assessments on more than just a static basis and one time a year. And, and maybe you understood the value of that, but how is that realistic? It's only me. I'm only one person, or I'm only 10 people. We're only 30 people, and we don't even have enough time to do, name it, right? But in these best practices, just to kind of speak to some of these bullets, you get a lot of information that's not commonly leveraged to update your risk assessment. What about your testing results? Oh, well, I address them as they come up. We handle them, right? Because we do management response and all those things. Okay, that's great. Maintain that, of course, right? But there is some insight into your organization, and you should leverage that insight and look to your risk assessment, right? And to give yourself, be honest with yourself, right? because we're looking at probability. We talked about that earlier. I'm going to revisit that for a second. We got volume. I do this many things, or I do it at all, right? And so that's going to give me some insight into the amount of risk that might be in place. But then, you can actually leverage your own environment's understanding and any problems that are identified in testing, right? And I know you're like, well, no, that's inherent risk, and you can't consider controls. No, but you can consider the some failures, some deficiencies, and those kind of things. Actually, COSO actually names those things. Won't get into COSO specifically and all those different different aspects. But if you want a source that actually speaks to the credibility of bringing in information found from your testing results, you can go there. And then the same with your BSA testing, because you don't just wait for your audit to understand problems. You're always looking at the results of your software monitoring, the results of your own process. You don't just take it as standard quo, like, yeah, I'm sure it's working. John and Jane are great at what they do. You're looking at yourself, right? You're honest with yourself. And so look at those results and make those updates to your risk assessments. When people talk about opportunities in risk management, it's sometimes lost. Like, what are you talking about, opportunities in risk management? Well, to put it as quickly as possible, that you may say that I have an understanding of risk, and it looks like this, right? Looking backwards, risk has always looked like this, right? It happens this many times. There's this kind of loss. There's this general understanding of a potential error rate that may occur, like those kind of things that you look at. Now, you might find that changes and it's not as it was before. Maybe it declines, and maybe you have an opportunity to readdress or reassign some of your resources where you were very heavy in an area because of the problems that you thought and that you were used to seeing aren't. I'm not saying just make sweeping knee-jerk reactions, but it's being aware of your environment, the way that you're managing the issues, the hurdles, the threats and vulnerability, those kind of things that you might be able to, again, reallocate resources. You might be able to take more risk in a particular area where you thought for sure that this area would cause this much time and this much work and this much attention, and you find it actually doesn't. Maybe we can loosen up the tape a little bit, the plumber's tape on this faucet, and not totally remove it, right? But maybe we're okay with a couple more drops of water here. We can handle that. And that goes back to some of the things that Kristen was talking about. And I understand what my appetite for risk is, right? And if I monitor and manage the amount of risk that I might be able to actually take more on, take more clients on, offer more products, all in the pursuit, remember, of winning, of success. But if you don't measure it, you can't manage it. We know those sayings. And if we're not watching it on a continual basis, then we would not have an opportunity to understand opportunities to take more risk. So more best practices, challenge yourself to look at these things on a go-forward basis.
That's great. So let's talk about the benefits of utilizing technology for some of this stuff. Risk management platforms are a great way of really being able to break down silos between departments. You're going to be able to have better communication, both intra and interdepartmentally, with the information that you are utilizing that system to store, because that information is beneficial, for each department. It's kind of goes back to what Carter said earlier about, having information that you wouldn't traditionally have information of to complete your assessments, right? To really understand the true risks. And managing risk is a year-round responsibility. It's not just every 12 months or 18 months, I'm going to do this assessment and I'm going to look back And, it's also something should be a nimble process too, right? Because risks change. How did we anticipate there being a pandemic where we ended up having loads and loads of PPP loans that hit our bank, and there were different risks involved with that, potential fraud and all these things. So it's like you have to have a nimble process in what you're doing, but that process and the results of you managing that risk should be, a best practice is utilizing technology so that information is stored and useful for other people that may use it.
Yeah, cheat code here. Everything we talked about, where the problems, actually the specific objective was some of the breakdowns in compliance and risk management, flip them on their head. And when you turn them around, technology is intended to actually address a lot of those things. Like the silos between departments, what does that mean? And why does it matter? Well, inconsistency. Silos breed inconsistency. With technology that can be utilized by everybody, you can address those. Also transparency between departments and what's going on. Learn from each other. A lot easier to do when you have technology as a centralized source. Oh, we use shareable Excel spreadsheets. That's okay. I did that too for a while. And that's good if you're looking at, a place to store your data, to access it and look at it, but not manage data. That's where Excel starts to, not be up to snuff, if you will. And definitely also it's more of the same. Learn from yourselves. So it's either in my department or throughout other departments. I might be understanding that, this is the way that you're looking at things. I can apply that over here. There's a problem with that over there. That's a problem over here, right? And so we can benefit from each other and with a centralized way. And centralization definitely is a big key word. Technology provides that, right? You have access, you can control access, aspects of information, all of these things. So there's lots of values of technology, but really take the things that can cause us problems in the way that we manage, flip them on their head. Technology should be addressing those things.
Yep. And then, to further on that, each of the departments we've been discussing has their own version of testing, or they should, right? And those testing results help determine risk mitigation efforts. When you have risk mitigation efforts that people don't understand the why behind, it's harder to get their buy-in, right? So offer supporting documentation and testing results to really support why you're making this risk mitigation effort. It's going to be easier to get people's buy-in. And then promoting consistency, that is so important, especially with the day and time we live in, where we don't know, who's going to be on staff potentially. We've got, we just went through what this last summer was called the Great Resignation, where we were losing employees, people were losing employees left and right. Like, it's a good contingency plan too for understanding the next body in place understands the processes that people went through, that the management of risk process that the last individual was managing in this system. And then it saves time, centralizes relevant information, limits requirements for manual entry. You have the potential to also outsource reviews if your staffing is short. You're utilizing technology that has that ability to conduct, whether it be vendor management reviews, whether it be, BSA reviews, whatnot. That is often a perk of utilizing technology.
Great, Kristen. Yeah, I realized that we separated our our values in the two slides here. So I think I kind of got ahead of myself and talked about these particular bullets in the previous slides. So yeah, nothing else to add here.
All right, so I vote that we recap the importance of the strong relationship between all these parties.
Yeah, and it really is more of the same, and that's what we're doing here. Right? What are the key takeaways? Well, we want a unified approach in identifying, measuring, and monitoring risks. Yes, you can use words that aren't the word risk if it makes people feel uncomfortable or they don't understand. That's a common word that is utilized when we're talking about managing hurdles, issues, pitfalls, these various things. But you definitely want to be on the same page, and there's lots of value to being on the same page. You definitely want to have a system of effective internal controls, and actually an internal control environment. And for banks, we know that at $1 billion, you should have one of those. But even if you're not a bank at $1 billion or getting close, still very valuable, because you need to understand what are your controls, right? Which ones are more important than another, and understand if they're actually working the way that you expect them to. It's two sides. What's your potential problems? What are you doing about them? And then also, you need to have collaboration across the various departments to understand how every department is supporting the bigger goals, right? Whether it's about profit specifically, or whether it's about the offerings to reach a market, then going back into profit, right? Or you're doing things in a way that's your brand, your personal brand as an organization from a social perspective, social economic, right? And say, well, this is who we are and this is what we believe in, right? And any of these reasons, you want to have an understanding, how are we supporting the reasons we do things? And we're definitely going to get a better understanding of each other. I think more appreciation for the things that we're doing, why we're doing them, why they exist.
And then, just to touch more on this, we're just promoting that the opportunity for collaboration on identifying and defining opportunities for improvement and growth is really the big ticket item here. That the more succinct you are in your approach to measuring, monitoring, and identifying risks, the more effective you're going to be at your institution.
Good to say it better, Kristen.
Perfect. So, Marty?
Hello. That was fantastic. A lot of good nuggets there as takeaways. We have 3 quick questions to pose to you. And I'm going to start off with the first one, which is, you mentioned internal controls a couple of times during the presentation. Is that a requirement for banks and credit unions?
I'll go ahead and take this one, Kristen. Actually, I think I gave the answer. So an internal control environment, it actually is a requirement under FDICIA, FDICIA, for banks, that at $1 billion that you should have an internal control environment. This is the second expectation under FDICIA. As a quick note, at 500 million, of course, we're expected, or all banks are expected to have a independent, basically, review of their accounting and financial reporting. So 2 different expectations in FDICIA, one at 500 million, another at $1 billion. And they do allow you to adopt any type of internal control framework that you wish, but there is specific mention in some regulatory publications to COSO.
All right. Very interesting. Okay. Question 2. With Appendix J, not all examiners will say something with regards to that. Why isn't it acceptable to use Appendix J?
Well, I can start with this one, and then you feel free to add on. But a lot of times examiners either don't look at your risk assessment, or if they do, they may not have any feedback on it. And just because they are not saying something doesn't mean it's right. The Appendix J is very broad overview. It kind of sets the tone for assessing some risk, but it doesn't go into the detail that you need to really truly understand the BSA risks that your institution may be facing.
Yeah, if I can add to another opportunity for some humor, that the speed limit says 55. And so your debate on, when the police officer pulls you over for going 70 or 75, maybe, or 80 in my case, but the response or your debate founded in, but you never stopped me before, that's just a very weak one, right? You know the rule, you know what the expectation is, and even, reading the blurb that's added on Appendix J, it's not the full risk assessment.
Okay, fair enough. Our final question is, why should a BSA professional care about risk management to the level you've been talking about?
Well, it is for your greater good. Honestly, it is really truly understanding the institution's complete risk management program in place to really understand risks that may not directly pertain to BSA risk, but inherently it will trickle down because it always does.
Yeah, and I'll say, besides the compliance aspect, why do you do the BSA work that you do? You have pride in your work. You want it to matter, not only for the institution, but from a patriotic standpoint, what it does for the greater good. And so because all of that is true, everybody that I've ever spoken to in the BSA field, that's pretty much true. It's not just, because, I'll get in trouble if I don't, right? There's a little deeper meaning behind it. So why wouldn't you do something in a way that gives you a better voice, a bigger voice, a more relevant voice to the bigger trestle board view, right? The out of the quarry, out of the technical, into the tactical, do something in a way that actually gets, is more valuable to more audiences. Do it because it's what you love to do and you want to be, to have a positive influence and impact in many ways.
Well, I think that's a very fitting and noble ending to today's webinar. Thank you, Carp, for that. And thanks to both of you for today's webinar. As a reminder, all registrants will receive a link to this recording, in fact. We'd like to thank you for joining us today and hope you'll join us on a future webinar. Enjoy the rest of your day.